Hi, welcome to Forex in 4. I'm Mike Conlon for FX EDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started.
Good morning. Today is Monday, May 10th, 2010. OPA, this morning we're talking about the Eurozone bailout that was agreed to over the weekend. The EU finally came together and they put together a rescue package for the struggling nations of the zone that's going to total nearly $1 trillion. That's right, one trillion with a T. Now, how this package is going to be made up is that there's going to be some funding provided from the solvent EU nations. The IMF is going to step in for a piece. There's also going to be access to an emergency lending facility, and the ECB is also going to engage in quantitative easing to try and provide liquidity to the market. All right, so that's seen as a good sign in the Eurozone in that it's actually stabilized the euro, meaning it wasn't going to go into a death spiral and it wasn't going to be the end of the euro. Now, this is good news for the euro in the short term. However, in the long term, people are starting to wonder, hey, where's this money going to come from, and what's this going to do to the euro? In the long term, my opinion is it's going to bring the euro lower. But you know what? That's okay. As long as there's stability in the region, world markets can function properly, and that's the most important thing to take away from this. Last week, at the end of the week, between what we saw here in the U.S. With the glitches in the stock market, in addition to the eurozone, I mean, it looked like it could have gotten very bad very quickly. So we're thankful in the market that the ECB and the Eurozone members came together to put this package together. But, the devil's going to be in the details, and we're going to see how this plays out going forward, namely who needs to access the facility, who's going to do it, how quickly, so on and so forth. The part of the problem, and I've been, railing on this for weeks and almost months here, is that they've been so wishy-washy about, trying to do this, and that they didn't have, the same type of command of the market that we did here in the U.S. When Hank Paulson stabilized the banks here in the U.S., we talked about the bazooka that he used. All right, he basically had a blank check from the U.S. government to say, we're going to do whatever it takes to make this work. And you know what that did? That calmed the market's fears, all right, and it let people think that no matter what happened, this was going to be taken care of. Well, that's what we're finally seeing out of the Eurozone, and they hadn't done it to this point. Had they done it sooner, then perhaps borrowing costs wouldn't have gotten as out of hand as they were, and, it may not have helped push the region into that situation that quickly. So anyway, that's what we're seeing this morning. We're just going to take a look on the daily charts here. But right here we have Euro USD. As you can see, this was on last Thursday. Euro got down to a 125 handle, low of about 125.2. Wow, I didn't even realize it got that low. We've seen a pop higher. This is on the news here of the euro bailout. Got up to just over 130 versus USD, and now it looks like it's going to come back down, and it could start retesting the lows. We could see, drift downward here, back to 125 in the ensuing days, and possible down to 120, within the next month or so. So that's what's happening with the euro. But we're seeing some risk appetite out there. You can see Aussie USD is higher. Here's something I want to show folks who like to look at technical analysis. All right, on this May 7th bar right here, and this is the daily chart again. You see that the body of this chart closed below the Bollinger Bands as the bands get wide. Whenever I see a body close like that, okay, it usually means a reversal's coming. And as you can see, you get a quick pop higher, and there it goes. It looks like that was good for about 85 to 95, almost 200 pips. So those are some of the plays I like to see. Obviously, it was very volatile in the markets. This isn't for the novice trader to look at, but for those of you who are a bit more advanced, have a little bit more risk capital, that's something to look at. When bodies close outside of Bollinger Bands, okay, that can be a great trade there. And then also you see the stochastic starts to cross to confirm it. So we're seeing some risk appetite. The Aussie's higher. We've got the CAD higher. That's the loonie. As you can see, we're coming back down, which is this is dollar weakness versus the CAD. Traders are increasing their bets that the Bank of Canada is going to raise rates in June. All right, they had good economic and employment figures in Canada last week, but this was overshadowed by all of the risk that was going on in the markets due to the Eurozone. So I expect the loonie to trade back down if everything remains stable. We're also seeing the pound is a bit higher. Take a quick here. Look at the same deal. Here's a hammer. Love to trade hammers. And here's the body closing outside of the Bollinger Band. We've got a stochastic cross happening. It looks like the pound is going to go a little bit higher. They just had their interest rate meeting. They kept everything the same. Okay, but it looks like this new hung parliament that was voted in may actually be able to work together with one another, with the central focus being reduced debt in the UK. So that's what's happening this week. It's really all about the EU bailout, and as long as they can continue to stay the course and things don't get out of hand, we should see some market stability return. Probably going to see some euro weakness, which means that we're going to see a little bit of dollar strength. Perhaps some of the correlations that have been around for a while may start to break down. We're going to have to see how that plays out, but in general this is a good thing for world markets. Potentially not for the eurozone, for the euro, but actually it's going to help them in the long run, because lower euro is going to help exports, especially in a country like Germany. They've complained about this for so long. Oh, we don't want to bail anybody out, but you know what? They're going to stand to benefit the most. So that's what's happening today. Hopefully they can figure out what happened with the stock market glitch, and some confidence can return to the markets. But hey, at least it wasn't financial Armageddon, and the EU lives another day. So that's what we've got for today. Good trading to all.
As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.